so I wanted to make another backtesting session for all of you. So we will be backtesting basically 2018 for EURJPY, but obviously only we will be dividing it in two. So I will be then making another video probably next week or anyway later on the next half of EURJPY, because I want to explain all the concepts basically during the backtesting. So it will be already a long video like this. So starting from the beginning, this is the immediately you realize that basically from here at this point you cannot do anything, because you clearly have basically a market that made an impulse, correction, impulse, correction, impulse, and after this you don't have any of our strategies. So let's go on and wait. Now at this point you quickly basically realize that overall from a daily perspective the market has created one of our strategies. In fact, you can clearly see that overall we have impulse, correction, impulse, break to the downside. So overall we have a clear impulse to the downside that should be followed by a correction, and then we can be looking for an entry to the downside. So basically we have a clear bearish ICI strategy. We have to go just on the weekly to see what is going on, and yes, we can be looking for a short since the market is retesting a consolidation area, and usually the market will go and test the low of the consolidation, so we can expect continuation to the downside from this area. So let's go on the 4-hour time frame and see first of all when the market will hit the 382, because always remember we can also I will do this on the daily time frame, so it will be easier for you. When you have an ICI, you always have to wait for the market to test the 382 before you can even start looking for a short. Okay, so the market clearly tested the 382. And let's see on the 4-hour time frame what we have. So clearly the market is definitely in a bullish structure, and let's see if the environment is clearly in a bullish environment, might be above the 0 EMAs cast for long. Let's see if the environment of the market will shift to the downside and we can then take a short. Okay, so the environment of the market is definitely extremely bullish. Started to shift. Let's see if it will cut to the downside. Okay, so this is exactly the moment in which basically the market has shifted environment. It's basically already retested previous support, now turn resistance. We only have to check on the daily time frame how high the market went. Okay, so unfortunately we cannot be taking a short, because first of all, if you take your Fibonacci from the high to the low, you can quickly see that the market broke about 0.786. You see this green candle here. So overall the market breached the last possible Fibonacci level for another impulse, and you clearly see impulse, another impulse to the upside, testing basically the previous high. Okay, so this is not impulse, correction, and impulse. It's impulse it's impulse, another impulse almost to the previous high, and then just the market starts consolidating. So basically you can clearly see that this is a new impulse, plus if you look at the structure at the moment we have also support here. You can quickly see from the 4 hours everything looked perfect for a short, but that is why I wanted to check the daily just one time before taking the short, because overall you can see that the structure of the market is basically turned to the upside. So from here we can actually expect a continuation to the upside, and we cannot take the short, we cannot take the long, because overall it's too risky to be looking for a long at the previous high area. So let's see what will happen. If the market will now go to the upside, we will have a W formation and we can work with that W formation. Okay, so the market clearly created the W formation that we wanted to see. I just want to see on the weekly what we have. So on the weekly, the market actually, instead of going and testing the low of the consolidation, created another impulse correction and another ICI move. Just a quick check on the monthly to see what we have from a monthly perspective. Okay, so from a monthly perspective, what we clearly have is a market that has created an overextended W formation. So we expect the market to make a retracement. So let's take our I will not be basically taking off and on the indicators all the time, because it's not something smart to do. but in general you have to ignore the indicators on the monthly, weekly and daily. It's only for the environment on the 4 hours. So we have our first target by taking our Fibonacci from the low to the high of the impulse of the monthly time frame on EURJPY. So taking our horizontal ray at the 382, this is what we currently have. So this is our overall downside target at the moment on EURJPY. So let's actually take it, it's monthly, so let's take it a little bit higher. Well, let's take it at 129.50. So overall, this is where we want to more or less see the market go. Okay, the first support area will be the 382 Fibonacci retracement of the monthly time frame. So this is the area that we want to see the market go. On the weekly, the ICI to the upside is completed, and on the daily, let's see what we have. So on the daily, what we can clearly see is that overall the market has created this ICI move. So on the 4 hours, we definitely can be looking for a short with the overall downside target from the monthly time frame. So the environment of the market at the moment is absolutely bullish. The MACD is way above the zero. EMAs are definitely cut for long. Okay, so this is the moment in which the environment of the market shifted. The EMAs are cut for short. The MACD is cut for short. Just a quick check on the daily to see what happened. Okay, so on the daily you can clearly see that overall the market created an equal bottom from higher time frames were bearish. The market already broke the neckline to the downside, and we have the possibility to create this a head and shoulders formation plus ICI strategy on the daily time frame, and the pullback has already hit the 382 Fibonacci. So on the 4 hours we can definitely be looking for a short. So so what we can clearly see is that overall the market already rejected once this strong level. Okay, so the market already rejected once this level. Now this is the structure. As you can see, we have previous support here, which is now turn resistance in confluence with the EMAs. The MACD is below the zero. Everything is pushing to the downside. Now you can't, after a candle like this, you can't just place your short order. Okay, so you will wait for this retracement. After this rejection, we can place our order. Okay, we can place our order. And how can we place our order? We have to realize that we have basically inside of this area. Let's see which strong number we have. So 135.50 is the strong level that we have in this area. So we can take our short from the 50, 65 will be here, and our stop loss needs to be above. So to determine how much above it has to be, we will take our Fibonacci from the high to the low, and our stop loss needs to be above the 78.6 just to be safe. So if the market will now go and retest this area, we will be triggered. Overall, our downside target, we already know it. We already know that we want to take profit at the 382 Fibonacci retracement from the monthly time frame to basically, because we have a double AM strategy on the monthly. On the weekly, we don't really have much, but on the daily, we have basically a head and shoulders plus an ICI to the downside. On the 4 hours, all the rules are satisfied. The market just tested our order. Let's see what will happen. Okay, so we are in a drawdown at the moment, back a little bit at entry price. The market broke at this point the structure, so from here what should happen is something like this. Ideally, this is what should happen from here. Okay, so at this point you are risk-free. After this candle here, you are risk-free on the trade. Let's see what will happen, if it will be stopped out break even, or if the market will go at target. Okay, let me extend. So at the moment the market is just pushing and pushing to the downside. You can see the environment of the market is always bearish, so, and also from a MACD perspective. So overall we are still good. Here you can see that the EMA is cut for long for 1 second after this impulse, but the MACD never cut for long. So the environment of the market basically still didn't change. So overall we are still in a bearish environment. So the market should go to target. This will be a very massive trade. You have a 1 to 6 risk to reward. Let's see, very close to target. Now if you see something like this, okay, the market is extremely near to your target, and then you see a rejection like this, you just close out your position. Okay, because you never know if basically from here the market will now start in a new push to the upside. So the market went extremely near to the entry, to the target, then start the rejection, close the trade. If you have more than a 1 to 3 risk to reward, but in this case you had a 1 to 5.5, so we banked 5.5 R on this WM strategy on the monthly with a ICI on the daily, and let's move on. Okay, so let's go back on the daily and see what is happening. Okay, what kind of a structure we can have. So from here, keep in mind that we are expecting a push to the upside. Okay, from here we're expecting a push to the upside because we have the support from the monthly. Okay, so currently we can be looking for an ICI to the upside with inverted head and shoulders here from a daily perspective, because basically what happened is that overall the market made a push down, retracement push down, equal high. From here you expect inverted head and shoulders, left shoulder, head and right shoulder. Plus, if you take your Fibonacci from the low to the high, you can quickly see that the market hit the 32 and actually hit also the 50. So let's go on the 4 hours and see what kind of a entry we can take. Actually, I went a little bit too quick on it. After this candle, the market had already retraced at least to the 32. So from here, we can be looking already for a long. So at the moment, the environment of the market is bullish. Okay, the market is below the EMAs, but the environment of the market is bullish. So let's see if we will close back above. Okay, so the market at this point closed back above the EMAs. And this is the moment in which you can be looking for a long. Now you quickly see that we have 131.20, strong number. And if you take your Fibonacci, basically from the low to the high of this impulse, you can quickly see that by taking your stop loss below the 78.6, you will be fine. Now the entry, why we're taking the entry from here? Because you have left shoulder, head, and possibility to create the right shoulder. Okay, and let's see what will happen from a target perspective if we take our Fibonacci from the low to the high. Okay, so overall, in this particular case, we have such a small retracement that what we can do, we can basically take our Fibonacci. If you have a head and shoulders, for example, like this, the market does something like this. You have a head and shoulders like this. This leg here will be so small that as a previous leg, instead of using this, you can use this. Okay, this will be the previous leg. So we will be using this as a previous leg. This will be the previous leg on the daily time frame. And overall, our minus 27 will be 132.80. We need to adjust our stop loss a little bit to have a 1 to 3 risk to reward. And we need to check if it will still be below the 78.6. Okay, so everything looks good. Let's see what will happen. So the market triggered. Okay, so from this area, basically, we can go risk-free on the trade. The market broke above. We had retest, broke above. So we can go risk-free on the trade. Let's see what will happen on it. Okay, probably we will be stopped out break even. Yes. Okay, so we got stopped out break even. So even if now the market goes to the target, we are out of the trade. Okay, so overall it never really hit the target, but overall we are out of the trade anyway. So this will be a break even trade. So let me delete this. And okay, so what we have at the moment, nothing really interesting, because if you look, what happened is kind of an ICI, but overall it's not really an ICI because the market created an equal high. You can see that overall we have down, up, the market created an equal high, so not something interesting at the moment. So let's keep going and see what will happen if we have something interesting that will happen. Okay, so this is definitely something interesting. The market went down, went up, broke down, created an equal high. From here, we're expecting inverted head and shoulders to the upside. And let's just go 1 second on the weekly and see what we have. So on the weekly time frame, our bullish view from the daily is even more confirmed, because overall we have a WM strategy on the weekly time frame and we're expecting a push to the upside from here. So let's go down on the 4 hour time frame and see what kind of price action we are currently getting for EURJPY from a daily perspective. So overall, at the moment, the market is exactly at the previous high, so nothing we can really do from here. We need to wait and see if the market will do a liver retracement, and then we can be looking for some kind of entry. So overall from here, even if we take an entry here, I mean, we don't have a good risk to reward. It's impossible for us to have a 1, 2, 3 risk to reward, because if you take your Fibonacci from the low to the high, the minus 27 is here, and basically the first strong number below it's here. So basically you don't even get a 1-to-1. So we need to wait for a deeper retracement. If the market will go to the upside from here, we will just go to the next trade. Who cares? There is no scarcity in the market anyway. So this is definitely a strong push down. Let's see what will happen. The environment of the market just changed to bearish. Let's see if it will change back to bullish. Okay, so at the moment, what happened on EURJPY from a 4 hours perspective is that definitely overall the market has shifted to the upside, but the environment of the market is still bearish. This is the exact candle in which the environment of the market changes. So if we get some kind of pullback from this area, then we can be looking for a potential entry. Worst case scenario, if the market will break this area and make a pullback to this area, then we can be taking an entry from here. But no, we can't be taking an entry from here because we already saw that overall. Let's see where our target is currently according to the ICI, because this will be the previous leg on the daily time frame. Our overall target will be 132.21. So no, there is no way we'll get a 1, 2, 3 risk reward. So overall, we're not very interested in this setup. So overall, yes, the market did exactly what we expected the market to do. So previous resistance here, it now turned support, acted perfectly as support, and the trade went, but there is no way we would have gotten a 1, 2, 3 risk reward to that target. Okay, no way. So let's just let the trade do its thing, and let's see what we currently have from a daily perspective. Okay, so what we have here from the daily is a market that currently has created a W formation. Okay, we have an overextended W formation. So we have to be expecting a push to the neckline. Now let's identify the neckline. The neckline is here, so 131.50. So we want to see the market make a push to this neckline. Now let's see on the weekly if we have something that contradicts this or not. So on the weekly, nothing really interesting. We want to see the market make a push to the downside, complete the ICI. So nothing really interesting on the weekly. So overall, we have a daily ICI to the downside. We need to wait for the market to shift its environment to the downside before we can take the trade. At the moment, everything is still bullish. The MACD is way above the zero. Okay, this is the exact moment in which the MACD cut below the zero. So where is our structure? The structure, as you can clearly see, is here. 132.50 is the structure, and 50.65, as you know, is our strong zone. You don't need the strong zones, but they do help. So we can take our entry from the 50, stop loss, take profit, you already know it. Stop loss will be above the 78.6 of the Fibonacci, taken from the high to the low of the impulse. And the market clearly hit our entry and rejected. Let's see if this will be a loss. Okay, so the market rejected the low, so it is probable that this will be a loss, and still didn't hit. Okay, so this was overall a loss. This trade to the downside was overall a loss, and let's keep going. So if you look at what happened in the market, nothing really changed. The market still has our W formation. It has also broken structure now, because if you zoom in, what you can clearly see is that overall you had resistance here, broke to the upside, broke back below. So we can expect basically the market to continue to the neckline from this area. Now let's see what we have at the moment from here. Okay, let's see what we currently have. So the environment of the market changed from a bullish to bearish. That is something that clearly we have. And now the market also started a retracement. Overall, our downside target is here. Now what you can basically quickly see is that you can take our trend line in the way that I teach you, okay? Instead of doing like this is how majority of people will do it. We have to take our trend line touching as many candles as possible. You can see that if you do it like this, you're touching 3 candles. But if you're doing it like this, you're basically touching 1, 2, 3, 4, 5 candles, okay? So this will be definitely a more accurate trend line. So let's see how the market will basically pull back to this area. Okay, so from here, if the market will now go and test the trend line, then we can definitely take our entry. So let's see if we have a strong area inside of here. Okay, so we do have the 50-65 strong zone. Now the market usually will create a wick and retest the area, but probably this, I mean, the next candle is not the one that is supposed to just skyrocket to the entry. Probably it will take some time. So overall, we have our 50 area here. So let's wait another couple of candles. Okay, 1 candle. Okay, so from this area, we can start basically looking. Okay, so the next candle is lining up with the 50 here. So overall, we now have the confluence of the trend line, strong zone. Sorry, I have to use a short. Trend line, strong zone. And we have our overall downside target here. Stop loss will be above it for a clean 1 to 3 risk reward. Our stop loss will be all the way up here, so it will be protected by the trend line, EMAs and everything. If the market will go to the stop loss, then it will be way above the EMAs that will cut for long. So overall, it's good that we are out of the trade because we don't want to be in it. Okay, so the market just triggered our order. I was hoping in a more basically aggressive rejection, but let's see what will happen. Okay, so the next candle actually did reject quite aggressively. We are now risk-free on the trade since the market broke basically below the previous low here. And let's see what will happen. Okay, so this was overall a 1 to 3 risk reward, just banked on this daily ICI strategy. So on the daily time frame, now there is nothing really interesting that we can do. Basically, what you can see from a daily perspective is that overall, yes, the market did create a new impulse to the downside, but it still didn't start any kind of new basically retracement to the downside. So what we need to do at the moment is basically what we need to do basically now here is waiting for the market to make some kind of pullback before we can be looking for another entry on this pair. Okay, so definitely the market started a nice pullback. Now if you take your Fibonacci from the high to the low, what you can quickly see is that the market hit now the 382 Fibonacci retracement. So if we go down on the 4-hour time frame, let's see what we have. So clearly we have a market that is definitely in a very strong bullish environment. So we need to wait and see if basically this will change with the next candles. Okay, so the environment of the market is near changing from an EMA perspective, but from a MACD perspective, okay, it just changed, but the market definitely already made quite a big push to the downside. Let's see how this pullback will be. If it, okay, so the market definitely did a quick pullback, okay, a very quick pullback, and again, okay, so this looks actually quite clean now. We have our structure. Let's see what kind of strong area we have. We have our 20-35 strong zone. So we can be actually shorting this area. It doesn't really matter where inside of this area you short. You can be shorting anything inside of this area, also at the close of the 4-hour candle. Stop loss needs to be above the area. The target from the ICI strategy, you know, you will be taking your Fibonacci from the high to the low, and your overall target will be 128.80, and overall you need to adjust your stop loss above this high, so anyway it is protected by this high, and we have a 1, 2, 3 a risk to reward on this trade. And overall the market basically started another push to the upside, so clearly rejected the lows. Okay, so clearly rejected the lows. So overall from this area, even if the market will now make a push to the downside, anyway we rejected the previous low, down, up, down. Even if this goes to the downside, it's best to basically miss out on the possible push to the downside, because it's too risky to basically try to short a market that is clearly rejecting the lows. So overall, yes, it's definitely possible that it will keep going to the downside, but it's too risky to keep shorting it. Okay, yeah, overall the market made a push to the downside, but as you can see, again faked everyone out with another push to the upside. So in this kind of situations, it's best to stay on the sidelines, because obviously we don't have an ICI anymore. We have an IC, failed I, and then again. So, but that is not the real issue, okay? Because you can definitely be looking for a short if it was only this, okay? You can definitely keep looking for a short. The problem is that this is happening exactly at this support area here, okay? The problem is that it's happening exactly at weekly support, okay? If this wasn't here, then we would be definitely keep looking for the shorts. So let's keep going and see what we currently have here on EURJPY from a daily perspective. So as you can see, this is not something that happens very often, okay? First of all, it's important to say that this is not something that happens very often, but you have an extremely overextended W formation on a daily time frame to the downside. Extremely overextended. Now let me check what we have from a weekly perspective. Okay, we do have weekly support here, and basically the ICI on the weekly has completed. So after a completed ICI, we can expect continuation to the upside. And yes, from the daily also we can see that the ICI clearly completed. So on the 4-hour time frame, we can actually be looking for a nice long all the way back to the daily neckline, which is here. So let's see if we will get an entry. At the moment, the environment of the market is still absolutely bearish. You can see that the MACD is below the zero, the EMAs are cut for short. We need to wait for the environment of the market to change. Okay, so this is the exact moment in which the environment of the market just changed. And as you can see, the EMAs are cut for long, EMA is cut for long. We still have basically space to our overall upside target. Let's see what kind of risk to reward we can get. The market currently broke back above the previous resistance, which is now turned support. So let's see if we take our entry at this area of previous resistance, now turned support. Let's see what kind of a risk to reward we actually get on the trade. So let's take our Fibonacci from the low to the high and see overall the upside target. We already know just below this area, so 129.50. Let's see what kind of risk to reward we can get. So if we place our stop loss all the way below here, obviously we will not get a 1, 2, 3, but we are getting a 1, 2, 3 if we place it below our 61.8. And overall, let's see if it's protected by some kind of structure. And it is protected by this strong area here. Anyway, it is protected. This was clear structure. We can see that it was support here, then resistance, now support, and it is below the golden ratio. So overall, it is a little bit more risky because it's not below the 78.6, but still it's a clean 1, 2, 3, and the market has clearly created an overextended W formation to the downside and has completed two ICI moves. Okay, one of the on the monthly and on the weekly. So the market triggered our order. Let's see what will happen next. Okay, so a little bit of a push to the downside. Again, another push to the downside. The market is still above support. Keep in mind, this is extremely strong support. The market is still above. So until it's above, we should be fine. If the market will now make even another basically push to the upside, then we can go risk-free on the trade. Okay, so we can now go risk free on the trade. Let's see if it will be a break even or if the market will go to target. Okay, so overall this was a 1, 2, 3 to target. So the overextended double formation to the downside completed, clear previous resistance, turn support, entry. Stop loss, we couldn't be more conservative. This was the maximum that we could do for our stop loss. It was best to put it below the 78.6, but in this case it basically it was protected by structure. But anyway, I like to be a little bit more conservative, but in this case this is the maximum that we could do. So let's see what we have now from a daily perspective on EURJPY. Just a quick check. I want to just quick, because on the daily we have nothing, but if we go on the weekly, just want to check what is going on. So from a weekly perspective, what we have here is clearly the market is retesting the previous support area, which is now turned resistance. Actually, is this area here. And let's see what will happen. I mean, on the daily, on the weekly, at the moment you have nothing, so you can't really be looking neither for a long nor for a short, because basically there is nothing you can really do from an area like this. Okay, so now there is already something more interesting that we have here on EURJPY, because the market clearly created an impulse retracement and is now rejecting the weekly resistance. Keep in mind that we had strong weekly resistance at this area, and as you can see, the market is now rejecting it. Okay, so we have on the weekly now an impulse correction, and you expect the next impulse. So you have an ICI on the weekly time frame. And if we go on the daily, we also have an ICI, because you have a up, down, and we can expect basically the market to make the push to the downside. Let's go on the 4 hours and see what we have. So on the 4 hour time frame, let's take our Fibonacci from the high to the low. Let's see if the market will make it at least to the 382. Okay, so the market never made it at least to 382 from the 4 hour perspective. So the market was extremely overextended. So too risky to take a short from this area. Let's see on the daily what is going on. The market kind of created kind of a weird inverted head and shoulders here. Nothing really interesting. We can't be looking for longs because on the weekly we know that we have strong resistance and an ICI to the downside. On the daily we have in the opposite situation. Let's see. Okay, this is definitely an important thing. The market broke back above daily structure, so we now have kind of this W formation on the daily, so we can expect a retracement on the daily, but on the weekly we need to see if it broke structure. Okay, so on the weekly it definitely seems like the market wants to go and complete this ICI move. Sorry, this W formation with an ICI move. So basically with this impulse correction and impulse. Why? Because it clearly seems that overall the market has broken structure back to the upside. And we can identify basically, we can go on the line chart just to be more accurate, and we can quickly realize that this was the structure that the market has created, and now the candle closed back above. So at the moment, it basically closed back above the resistance. So we can expect the next candle to go for a retest of it, and then it make it usually this ends up being a powerful explosion to the upside to complete the W formation. So let's see what will happen from a daily perspective. Okay, so let's go on the 4 hours, because on the daily, I mean, we need to see the retracement to the neckline of the W formation from the daily time frame. Let's delete this. Not very interesting, not very interesting, thanks. So overall, what we can do. Okay, so where is the structure? The neckline is here, you all know it. The neckline is here at the 50-35 strong area. Okay, so what we can be doing, the market started the retracement, we can be longing the previous resistance, turn support all across this area. Our stop loss will be below the 78.6 of the Fibonacci taken from the low to the high. And it basically, what about our target? Our target, you know how the NICI works basically. If you want information on this leg, you need to take your Fibonacci on the previous leg. So this is what we will be doing. We will be taking our Fibonacci from the low to the high, and our target will be at the first strong number below this area, so 131.20. Let's see if we get triggered. Okay, so we just got triggered on the trade, and let's see. Okay, so at this moment we are risk-free. We are risk-free in the trade. Let's see if we will go to target or if it will be a break-even. It seems it will actually be a break-even. Okay, so definitely this was a break-even. So let's see what will happen. Let's analyze the structure at the moment. So the structure at the moment is here because the market last candle to the upside was here. So if the market will break the structure back to the upside, then we can take again our long. Just to remember, our upside target is here. So let's see what will happen. Okay, so this candle closed above structure. This is exactly the candle that closed above structure. MACDs above the 0 EMAs are cut for a long. So we can be taking our long from here. Our target is here. The stop loss will be here. Why? For the simple fact that first of all we have a 1, 2, 3, and second of all it's below this lows. Okay, it's below this lows, so protected by structure. So let's see what will happen from here. Okay, so we are straight into a drawdown. Okay, the next candle pushed to the upside. We are now risk-free on the trade, and let's see what will happen, if it will be again a break-even or if it will go to target finally. Okay, almost. Okay, so I made it to the target. Let's see if we will have another trade for the first half of 2018. And no, because we don't really have anything interesting from here. Okay, so this is overall basically what we had on a EURJPY. So this ended up being a break-even. So we have one break-even, one break-even. I don't know why this basically disappeared. We had a big, we did have a couple of trades actually disappeared. So we had definitely okay, anyway, you guys can go and rewatch, you have the video, but in general what we had was a short from here. If I don't remember, we definitely had a short here, and for the push to the downside we definitely had a short from here all the way down to our target, to our downside target. We closed a little bit early. I remember we had a 1 to 6 and we closed it a little bit early for a 1 to 5.5 because basically the market was rejecting the overall target. And then I remember that we had a break even around this area. We had a break even around this area. So probably this impulse correction and impulse here to the upside that we wanted to see from a daily perspective in the first entry is left shoulder, head, left, right shoulder was here. Okay, so this is what we had here. So overall, yeah, I don't know why I deleted, probably because I hit the backspace just after doing it. So overall we have one break even, two break evens. Okay, so two break evens in the first half of 2018. Then we have let's see how many losses. So two break even and one loss, two losses. Okay, so one break even, two break even, sorry, two losses and a 1, 2, 3 and 4 wins. So quite strong first half of a year. We have 5R, more than 5R here, 3R, 3R, so 6. So 6 plus 5, we have 11 plus 3, quite good, quite good. So basically it's extremely good actually. This has been a very strong first half of the year. Okay, we're speaking about a 17R basically in the first half of the year, so very strong. Okay, so I will be making later on, probably in the next week, I will be making also the second half, and I hope this overall helps, just something extra that I like to give all of you.